Hello guys, how are you doing? On a wild day, all of a sudden we had a big dump in tech, and you can see Bitcoin here down 50%, 5%. We have Nvidia down, I think 6, and Tesla is also down quite a bit. And these are big players in the markets, obviously. We will go through the commodities, the sectors that we're looking at, just to have a brief update on where we are in time just to see what's happening. Uranium is also getting sold today quite heavily, 4%. I will make a separate video on that. Not the best looking candle on the daily chart, but we will see how it is. I'm mainly worried. I'm actually only worried about one thing in the uranium right now is Cameco is potentially topping out, a major, that big head and shoulders pattern that we looked at a few days ago, or was it last week? So let's see where we are in time here. I will do that, and then we will definitely check into the silver. And oh, excuse me, before I go, we'll go on with the stuff here. I have a naked chart here. Some people in the chat ask me why I sometimes use the Heikin compared to the um, the standard candles. And basically, to me, looking at you know the chart here, let's zoom in just a little bit here. If you zoom in here, to me, it just gives a more clear view. You can see the uptrends and the downtrends more. You can see it here again. The uptrends are green, the downtrends red, and all that. So again, here, I think for your purpose, being able to see the levels, see for instance, uh, you know, the trend lines where they're connecting and all that. I think that is a better way to do it. So that is why I use Heikin candles more and more. And if, again, you have to study or learn about the Heikin candles because the candle that we're printing today is basically a mix of today's price action, but also the yesterday's price action. So sometimes I'm swapping back to, the standard candles to basically see, the severity of the candle. For instance, here today, again, that is a very large red candle. Again, just be careful up here. But again, you can see that is dangerous, right? We're down 6% today. Switching to the Heikin, it looks not too bad, right? Again, that's also why, I mean, it's not all over just yet. It is just a very big, candle here at the all-time highs. Volume is quite high though. So that is why, this is nothing. This is still the uptrend. It is an indecision candle, of course. These are bullish Heikin indecision. And here you go, like, oh, aye, that's not really the best looking view, right? So that is why I sometimes switch back and forth if I want to show you, again, that today's price action alone and not a mix of yesterday's and today's price action. So that is why. Again, I like this more. Also, when I do the charting, off screen, you can say, or off no audience, I have this on here. It gives a lot more clear view, in my opinion. You can also see horizontal lines better. It's just a very good one to do. And yeah. So silver, again, for some reason, again, my entire silver thing here is gone. It's down the drain here. But silver is doing okay given today's sell-off in tech. Commodities has done really well still. Oil is still up also. But what are we looking at here for silver? We have our levels. I want to go down to the 2 hourly. I want to draw them with you because I have, again, we have the two pivot lows here, which are connecting beautifully all the way together here. You can see that roughly the 29.7 is a big level. And then you have some basically all the way up to here. You can see internally here as well, the high over here, the lows there. So you do actually have like a range here. So a lot of support and resistance between 29.7 to like 30. And right now we are peaking above. Again, we're just peaking above that level there. Again, we looked at it also. We want to get above 29.9 here, breaking out, testing it, trying to go higher into a little bit of liquidity here, by the way. But the main thing to look for right now in silver is basically this whole triangle that is formed, right? Something around here, right? That is the one to break out from. So when will that happen? Again, I will say anything above like 31 here opens the door for higher prices, because you're breaking this whole thing here, and yeah, I think we're going to go to at least 32.5 up here. Those highs here, again, Heikin candles is just showing very clearly that here you have resistance. Again, it might just be me here, but I'm seeing it a lot more clearly, even though it shows the same. But so yeah, that is silver doing okay today. I want to show you again. I want to show you the difference here on the Heikin just before we go. Again, this is today's candle. Looks really. This is a bullish Heikin candle, meaning you have no wick on the bottom and you're having a large body with a wick on top here. That is a bullish Heikin candle. There is actually a very simple trading um, strategy where you're using the Heikin candle only. I did explain that one. I will try to do it again here just very briefly. Again, this is the downtrend, right? So whenever you see a bullish Heikin candle, again, this is very general made here. Obviously, you need more layers to that. You're basically going long the next day, and you won't sell until you see a bearish one. So again, here you would have been a negative trade. Here you would have gone in here, and you would have sold over here. That would have been your trade. And then you're waiting to go long again. You go long here. You're basically waiting until you see a bearish Heikin candle. There it is. So you're getting out there. That is your profit. Again, it sounds simple, but you might want to add a layer or two. So this looks bullish on a Heikin, and here you can see, we had a big intraday flush into again the supply over here, and we're having wicks on top there. So a lot of intraday volatility in silver. That is basically the big kick in the face. Again, 3 o'clock my time, 1 hour before roughly the markets are opening. Again, here we have 1 o'clock, but again, you can see we have 3 o'clock here in my time, 3 o'clock, 1 o'clock here. Again, 3 o'clock, 1 o'clock over here also. So yeah, you can see even though the Heikin looks good, this is also a little dangerous if we start to trade sub, 30. Basically, you opening up the door for more downside. But I'm actually quite, again, silver held up nicely today. Not gonna lie here. Gold overall, again, yes, gold looks really good. Long term, we have this whole flag thing here, which we're waiting to resolve. That will not happen tomorrow or this week or the next week, is my feeling. Downtrend here. We have the pull there. We're probably going down to see, 2,500 and change here. And hopefully when we meet the uptrend, we are going to resume, right? That is the idea. So, yeah, gold. Again, if it wants to preemptively, again, gold is doing well today also, 0.5% in a day where a lot of things are selling off very hard. If we can start to break out here early, it is a good sign, but it looks a little bit premature to me. But again, I wouldn't mind, obviously. But again, and then we have some big levels up here at roughly 2,720. We have these two major highs up there. So that is gold for you. Bitcoin, we will dive into Bitcoin here. I want to draw the head and shoulders pattern, which all of a sudden comes alive again, right? Again, it was negated to some, it was negated, but again, that whole pop there and the reversal, yesterday's pop, reversal today. Again, we are not worried until we get below 92K. That is basically where this whole thing starts to come down. And I have a target of roughly, we can measure the pole here. Then we add that to the lower side there. So again, roughly 78K here. But I wouldn't be surprised if we are going to see, 74K or even all the way down here to 66K could be that whole big retest of that breakout here, that one there. I made it thick for you. That was the big breakout, right? Breaking out, retesting, boom. So we could actually come all the way down to here, 66K. And we had a lot of support over here as well, 66K. So Bitcoin is living life very dangerously. But again, it's very wild. And again, in 2 days' time, we could be up here again. It's very, very, very volatile, as you know. Peaked above 100K also, swapping back down. Never the best thing to see. Uptrend here, short-term broken. You can see we had that whole uptrend as well, which was broken now here. That is the one peaking above 100K, boom, and then, stop losses are setting in. So Bitcoin, yeah, looks like we, again, this week or into the next week could have that breakdown. And by the way, check out the post that I did on Twitter where you can clearly see the correlation between Bitcoin and Nvidia. It's just dead on. It's just dead on. Bitcoin is tech. You can make a lot of money, but again, right now it's nothing more than new tech. I don't care what anyone else is saying. It doesn't mean that we hate Bitcoin, but again, it is nothing more, nothing less. In the future, maybe. The Dixie here again looked really, really strong. I mean, today here I want to show you the October. So yeah, we broke out above this whole long-term range, the yellow one, the upper and the lower. And this popped really good, testing. So until we start to trade below 107.7-ish, until then, Bitcoin looks really strong long-term and short-term. If we start to break here, you could argue head and shoulders here potentially forming. Then short-term, again, it looks weak. So, but yeah, definitely getting some bid here during the U.S. session, which it's very often does, by the way. So Bitcoin, excuse me, the dollar still holding its ground. Also note here, we have this from all the way over here, the big, breakdown here, bear market in 2022, and we're here again. So big support here for the Dixie, the good old dollar, basically. Yeah, we have the uptrend somewhere around here. Again, that is the uptrend lows, which we would like to hold. So again, anything, below, again, 107.7, 107.5-ish, that is when the door opens up for a move all the way down to 105 and change. And that, again, we could be forming. It could be, again, we don't know. It's in February somewhere. A bigger topic pattern here. We have a smaller one here potentially that could spill over and form a larger one. Again, this is purely, not known at the moment. We have our oil here. Again, oil peak. Again, it peaked above that 71.5 and has rallied quite resiliently. And also, if we take some internal stuff here, we are breaking, retesting here. I think oil is playing a very dangerous game for the shorts. Again, it doesn't mean that we are going to break out, but all I'm saying, and if we're getting close to like 80, between 77 and 80, I think the shorts will have to cover. I really believe that because you're breaking that whole 3-year triangle, 77 to like 80. So right now it's still short term. Potentially some stuff is going on here, but again, I wouldn't be calling anything just yet here. Again, if oil breaks above roughly like 80, we are in for a potential great year or two, maybe even 3 in energy. So keep that in mind. And on here to the QQQ, the tech sector still, at all-time highs. Bad day today, obviously, 2% roughly, and that's never a good thing. But again, overall, still looks good. The uptrend hasn't really been challenged that much. I will say, this is still a bull flag, by the way. So we're bull flagging into support at roughly 505, that all-time high there, or previous all-time high. But if it fails, that is when things are getting a little bit dicey for the tech. You can also see here that internally we have this whole uptrend here, all the way up there, and we are losing that now. We're breaking down, testing. So this uptrend here from basically the second half of 2024 seems to be over, right? And then we are now into the next long-term one, the 2-year long uptrend, which we're sitting at right now. So anything below 5.5, and we should open up the possibility that this whole breakout here could be over, could be. So yeah, but again, bull flagging into support, always a good thing to see. Palladium here, again, I have to update this chart here, but Palladium here is definitely, squeezing up here a tiny bit. Why isn't it working here? Why, squeezing up right here into that whole supply and demand zone between 850 to like 940. So platinum here is trying to find some ground here. You can see long term 2011, 14, again 13 here, excuse me, 17, 18. You can see here again big supply and demand zone here, which we are trying to hold right now. And again, we had a big rally all the way up to 1,250 in October, and then we just dumped with the dollar gained strength, and then also the Trump win, which was excessive dollar strength here. So again, now this is our level to get above for the really bullish momentum to the upside. Internally here again we have the 1100, which is also important, but hopefully this is a part of a bigger setup here, which will resume in like early Q2 of this year, if we hold, that is. I also note here we have the entire downtrend is broken. So we have the downtrend broken right here. That is the big downtrend from 2022. Broken here, and now we're going sideways. So this is our sideways. Hopefully the bottoming this whole thing here for palladium. But it is, I wouldn't say struggling, but it's definitely, playing with a lot of support here. I will say one thing that when I came on here is, again, platinum. False breakdown here last week. That whole thing there, below the long-term red uptrend here, 1 year roughly. This wedge pattern here, false breakdown, snap back. Again, you can see it here, which I'm talking about all the time, with these whole false breakdowns or breakouts. Look at that. Again, breaking down, testing, failing, testing internally, and then once it's confirmed, you're very often going all the way to the other side of that formation which you're breaking down from. So false breakdown here, snap back to the other side again, and then you have the rally there. That's what I'm trying to, again, look for. So right now, short term, platinum looks really good here. I mean, this move does look like it's, somewhat of extended here. So let's have a pause of it like a few days. But yeah, platinum here, again, it's very early, just like in oil, but it is showing some short-term strength that we want to spill into longer-term strength as well. The next one is 980 to get above there. Copper is interesting, very interesting. We have the big $4 level. Very, very, very important for the past 5 years, even more. I think it goes back, longer, right back to 2008 also. But at least for the past 4 years, the $4 level has been massive support and resistance. Coming from above, support, right? Coming from below, often resistance. So it's very, very clear. Therefore, and mixed in with the whole uptrend here from like basically the lows of 2020, we are now at a point, big decision point. We either break down and open up again the door to 3.3, or we break out, giving a buy entry in copper with the stop below $4, obviously. So yeah, copper, interesting there for copper. What else can we look at here? We can look at nat gas here. I'm still bullish on nat gas. A little bit dangerous, the waters that we're testing here. We might have a detour. We might have a whole retest into, again, 2.8. But and this is also what I want to show you, the difference between the Heikin Ashi, because you have a lot of gaps, ups and down here, day by day. And again, I think the Heikin Ashi gives a little bit of a clear view, especially why I'm saying that gas here, if we lose that little uptrend there, together with the whole support and resistance here at 3.6, but also 3.3, we could break down here and actually could get back down to like 3 and a tad below there for the gas, for the nat gas. I think that is all. Again, weird day where tech is selling off heavily. You can see here I have my tech here. So you can see Nvidia down 6%, Tesla down 4%, Amazon 2.5%, a lot of 1%ers, 2%ers, Bitcoin down heavily. So yeah, what a day for tech. I will do uranium update after this one here, and then I will go a little bit more into just specify the whole platinum chart and the copper chart in more detail because they are looking interesting. Cheers, guys. Bye.